Hey, how's it going, guys? Welcome back to mentfx, and in this video I want to look at a very important concept that a lot of people kind of leave out in their trading, and this will apply to all types of trading, whether it be retail, where you might be looking for to trade some kind of flag patterns, some kind of channel patterns, whether you're smart money trading from areas of supply and demand and areas of accumulations, distributions, and the transfer of buys and sells, maybe utilizing the fixed range tool, using VPVR to understand how orders and clusters of orders are formed in this market, and if you're a trader that likes to use structure. So whether you are a intermediate, beginner, advanced, whether you're smart money or whether you're retail, this video will help you in something that I deem to be very, very crucial and important in Forex or in any market of trading. Now, that one thing is the ability to create an analysis based off of storytelling. A storytelling technique is one that makes you look from a perspective that is outward instead of looking very, very close to price and getting confused by tiny little fluctuations. This type of thing, where you're looking at one leg or something of that sort without taking into account a larger picture, is actually what stumps a lot of people on the lower time frames and sometimes even on the higher time frames and keeps people out of very, very good moves, right? When you can zoom out, you are able to see the market for what it is in terms of how structure is forming on a higher basis, how the structure is more likely than not shifting on a higher basis, and how after that higher basis structure shift, lower term structure in the market that is shifting short term, such as this, right, that's giving you tons of really good opportunities inside of here with accumulations, inside of here, which you can go and study, is probably going to be another accumulation, inside of here, which is going to be an accumulation, and so on, right? And again, forget the fact that I'm looking at an equity. It does not matter. This applies the exact same way to currencies, and if you haven't seen that, make sure you watch some of my other videos, because we look at this every single week, especially in the mentorship. And stay until the end, because there will be another free spot for the mentorship announced. Now, the point of a story and why a lot of retail traders can still be successful even when they trade something that's not very that's not considered smart money or anything of that nature, is because what they do is they develop a story around price and the way price is moving, so they can foresee along their biases how price may form and move in a certain direction, whether they're using a area of consolidation waiting for the breakouts, whether they're using, you know, ascending shark fin tooth patterns looking for the breakouts, so on and so forth. What they're doing is they're formulating an entire story and basis for how price will react and move, and as they see those breakouts of their little shark fin soup patterns, whatever they're called, right, they go and confirm those with other things that confirm this bullish bias, and they are able to then more likely than not get into a really nice entry down here to take it to the top side into new areas of potential resistance or support, right? That alone, the idea of taking, you know, resistance, support, so on and so forth, showing it out, buying the little shark fin soup pattern into those buys, is a very, very decent way of trading and can work because they are formulating a story about what's happening. The reason a lot of smart money traders fail, and again, I believe that smart money is significantly better and you can get significantly better and refined entries, as well as long-term partial and managed perfectly entries to take you higher. The reason that a lot of people, I believe, fail in this industry when it comes to smart money trading and analysis is because what they do is they go and open, let's say, Euro USD or something of the sort, and they say, okay, where am I in price? Okay, I'm right here. Okay, cool. Where's my last up move before the down move? Here. Okay, I want to sell this. I want to buy this. I want to, or maybe I want to buy this. Okay, cool. So I want to buy, where is it? Where did I make it go? I want to buy this. Okay, I want to buy this, right? And sometimes even they won't even look for confirmation. They'll kind of say, okay, that's my last down for an up move. Let me look to buy this and take it to the top side, right? When you do this, even along the lines of smart money, where you're correct, this is an unmitigated, left behind imbalance, last down move before the up move that also technically took liquidity, right? But you don't even need all that. When you just take a zone randomly like this and look to buy it, all you're doing is trading along the lines of what mass retail logic or emotion ends up letting most of retail traders lose. When I say you need to formulate a story, if you go and watch any of my silver videos released over the last week or so, you'll notice that I formulated a story from the top to the bottom of the entire market. If you all remember correctly, we went to the monthly and took a look at how price is approaching an area, how it's mitigating, and what we can expect from that area. As we see that, we notice that price can be delivered in structures downwards as well as structures upwards. And these upward structures can be sustained until this downward structure is remet, in which case we can look for longer term pullbacks, hence this little pullback arrow that I have drawn in, if there is going to be a pullback before the large up move. Otherwise, we're going to look for ways to be part of the move that will continue higher. However, that's going to be part of a bias. Now, when we do this, and when I go from top down, I'm not doing this because I'm trading the monthly chart, right? I'm doing this because it allows me to instill an idea about how price has moved from and to areas, how it's moving in or around those areas, how it's breaking down or not breaking down, whether it's doing it impulsively or whether it's doing it in the form of grabs of liquidity, right? How orders are clustering at those areas on the higher time frames, how orders are clustering in those areas on a lower time frame, tapping into those same up moves before the down moves, right? With, again, structure that is bearish into structure that might be bullish, that might, again, switch bearish in cases here, right? That's what we were expecting if you remember that video, and it gave you tons of opportunities when we look for the buys here up into these supply zones, because we formulated a story that price wanted to get into the supply zone before falling. So the main thing I want to get about with this entire teaching is that you shouldn't just be taking a down move before not move that might have imbalance just like this and saying, all right, I'm going to buy there. You need to learn to formulate a story about how price is getting to where it's getting, why price is where it is, and how or where it's looking to target. And then that bias should formulate and should be able to be adapted or changed. So that bias also has to be flexible as price begins to play out, because we are trading nothing more than the footprints of smart money. So if we go and take a look at Verizon, for instance, I just analyzed this with the group and sent this mini little sell out, which I believe is going to be a nice sell. I'm looking just a partial right here. I was looking for it to actually play a little bit higher and take another sell up here, but this is perfectly fine. Again, just because this partial isn't at 1-to-1 does not make it a false trade, but this is how you need to be able to read price and then play with it, even if it means that you can't get the best RR, right? Similarly, this could have easily came up higher, tapped into the supply zone up here, maybe even the 50% of the supply zone, right? And given me a very, very nice entry right here, right? And now all of a sudden that same trade right here is a 1-to-4.3. And if it does continue to the lower demand zones that I was looking at with the clusters of orders within them, that's about a 1-to-14. And if I made a video on that, you know, it's a 1-to-14. It looks beautiful, but you don't see the background, which is understanding that, first of all, not every over refinement of a supply zone has to be hit, right? And in some cases, there are going to be some very, very small profits before you hit very, very nice runners. Now, the importance of telling a story will also help you in this case where structure is not as simple as higher highs and higher lows, right? It will help you in cases where you're seeing something along the lines of this, right? When you're seeing something like this occur, it's very hard to know what exactly structure is doing. That's because you're not telling yourself a story about what price may want to do or how price has moved in the past, right? This analysis here and the lower time frame entries are based on the fact that the higher time frames are beginning to appear like they want to distribute before taking price to new liquidity highs, right? As we get lower and lower and work within that, we begin to see lower time frame structure breaks, which are actually coming down into the breaks of structure off a higher time frame impulse leg. But this higher time frame impulse leg right here was only for the purpose of running the liquidity from this impulse to this impulse right here. This huge impulse down that broke the structure inside here set us bearish. While it set us bearish, it set us bullish inside this area right here, which then set us bearish, but inside of this move back up set us bullish again, right? So notice how if you do not have a story behind what you do, whether you're a retail trader or whether you're a smart money trader, your trading will suffer drastically. You need to have a supposition or an idea about what price wants to do. So in a case like this, where I see the large time frame structural breaks downwards and the move back up to fulfill supply zones within this area, as we target using, whatever you might want to use, whether you want to use your eyes to see the imbalances up here or refine some areas up here, or draw on, for instance, a VPVR and notice that using the VPVR, if you understand how to read it, that there is a ton of liquidity that lies in these areas and orders here that need to be fulfilled on behalf of smart money, then you'll begin to understand why these mitigations here are taking place and why more liquidity is being created before this happens, right? And now as those things occur and price breaks down, you're able to shift a short-term perspective shorter to go short, right? But just because you want to go short to continue this move all the way down to start grabbing liquidity on this market does not mean that you can just sell into it, because it's a weekly chart. It's going to take time, and we are day traders. So we are looking for ways to get involved in the market day to day, right? So as we get lower and look at this correction, we understand that yes, it is true that this market right here is bullish, okay? And if you were a dumber retail trader or a dumber smart money trader, you might just be zoomed into even this zone right here, and you might have already looked at this right here as a break of structure. Now, again, you might have been right with that, right? You might have been right about that, and you might have gotten a really nice sell right here before it took you lower and gave you another break of structure. But if you didn't know that this move right here, this impulse right here, was for the purpose of fulfilling the demand zones in this area, which was part of this upward structure into the areas here, well, then you're going to suffer, or your trades are going to suffer, when you get into the supply zones up here and look to sell them, right? Now, if you don't do that, you're looking for the buys in here with the story that this is a larger pullback into the supply zones up here before prices again want to meet you lower, right? This is what storytelling looks like. And at the same time, as we tell this story and draw it out, we can see how Wyckoff is being formed in all these areas with the highs, how that Wyckoff is being cleared, and how, of course, we're not breaking structure down on this specific time frame just yet. So, of course, if price wanted to, it can easily come a little bit higher, even tap into the supply zone higher up, especially with this cluster of orders and the liquidity just above this high and this high, before then giving you the impulses that will put in motion this markdown on this overall distribution, which again will be met with lower time frame distributions inside here, so on and so forth, right? So notice that when I look at a market, it's not that I just open it and just assume, okay, I like that area, I'm gonna buy or sell from it. Now, it's possible to do that, and you will see success doing that. But a lot of the time that your areas of interest get stopped out, right? So for instance, if you had this as an area of interest and look to sell it to get to new lows, the reason that you probably either broke even or even took a loss on this is because you didn't recognize that this functioned as its own impulsive leg in the market to put in a new structure off a higher time frame, which means there should be a meaningful pullback in the market to fulfill the orders that rest up inside of the areas up here. Hence why this is tapped and now is breaking down again, okay? And again, as I say, the storytelling aspect of things allows you to look at a break of structure here, a break of structure here, a break of structure here, and a break of structure where? Right here. And still not be confused about price, because you understand this break of structure was for the purpose of this longer term move back up, and this break of structure might be for the purpose of an even longer term move down that wants to distribute down into the levels here to either continue another distribution level up into a continuing test into a distribution, or to finally continue to completely new lows to start taking out the impulsive legs that created the structure here, right? Because there's a difference between structure that you see on the candlesticks, which is something I teach in the mentorship. There's a very big difference between what you see in the candlesticks and the type of structure that is delivered to you institutionally. Institutionally, structure is delivered with large impulses in the market, which do also create break of structures that put into effect a bias or a story about where price wants to head. Similarly, those institutional biases can be then confirmed with inside candlestick structure. Now, because the two are not the exact same, that will mean that you will still take losses in the market. I still take losses in the market. My members in my mentorship still take losses in the market. However, those that understand how these losses formulate the wins in the future are the ones that are consistently and full-time profitable traders now. Okay, so hopefully this video made a little bit of sense concerning why it's very, very important to understand. Oh, sorry, let me delete this. Here we go. About why it's very important to formulate an entire story about what you're doing in price. If you have a story about why these breaks of structures are happening here and why they're taking you higher, your bias changes from just looking for expectations of bullishness into understanding how this area can function as a distribution that wants to take prices completely lower, right? So even though there was this break of structure and this break of structure, we know that this was all for the formulation of all the liquidity in here to begin to run prices lower on the basis that this structure break happened here. Now, if we zoom out further, we notice that the basis of this structure break happening here and this move back all the way here to continue lower is for the purpose of breaking more structure here to continue on the overall push that happened here, right? So all of this inside here, if you were just bearish off of this push right here, you would have been waiting a very, very long time until price gave you an optimal area to enter off of a previous distribution or a previous supply zone. Instead, you are able to take the story that is being told to you here of prices breaking lower and then beginning to shift higher candlestick wise inside to take it to the top side with the accumulations that happen in every single one of these areas as they test to the top side, right? With larger pullbacks that then continue higher, that then finally distribute into pushes lower. And as a result, you formulate the bias that price will come to distribute again one more time or test distribution of all the orders in here and here as price moves back up to go lower. Now, all it takes is for you to just have this area or this area right here nullified and invalidated. And by that point, your bias can change and you can be in line with it because your bias never has to be set in stone and your bias can change. You need to recognize that not only should you follow your bias, but that your bias should also be flexible. You cannot predict the movements in this market. However, when you formulate an idea about what you might want to see them do, that's when you see the most success, even when it comes to trading retail, even when it comes to trading smart money. So very quickly, to round this out, we will go over a winner for the mentorship. And again, this is the third of the fourth. So anybody that wants to have a chance, all you have to do is go and comment on this video right here. In the comments, just drop any comment and write #mentfx. What we're going to do is we're going to copy that right now. And we are going to go in here, paste that. Not going to have duplicate users. We're going to include the replies. And we're going to filter everybody on the #mentfx. So if you got in early, fantastic. If you didn't, then it's going to be less of a chance that you get this now. So we're going to compile all these comments very quickly, and we're going to run the third of the fourth mentorship giveaway for free. We're going to wait a second. Quite a few of you. About 1,276 comments. So let's run the raffle. And the winner for a free month in the mentorship is Mike Tipple. Let's get this money. #mentfx. Thank you, man. Make sure you message me on Discord. Check out the description of this YouTube video to see what my Discord is, or reach out to me on Instagram. Just show me your account, that this is your actual YouTube account, and I will get you added to the group. So thank you so much for watching, everyone. Hopefully this video made some sense to you and basically start to apply real biases and a real story to the price action that you're viewing. Thank you very much, and I'll see you guys in the next video.